Thank you, Lorenzo. Another brilliant session. Moving swiftly on, I would like to pass now to Simon Webb, Reuters editor for commodities and energy, for an exclusive conversation with ENI's Chief Executive Officer, Claudio Descalzi. Simon, over to you.
Thanks, Owen. Hello, everybody. As Owen said, I'm Simon Webb, the Global Editor for Energy and Commodities at Reuters, and I'm here with my colleague, Steve Dukes, Reuters Senior Correspondent in Milan. We have the great pleasure of being joined today by Claudio Descalzi, Chief Executive at Italian energy group Eni. Claudio has been CEO at Eni since 2014, and he's been at the company for over 40 years, since joining as an oil and gas field petroleum engineer in early 1981. Before he became CEO, when he was head of the upstream oil and gas division, Claudio's discovery track record included the group's biggest ever gas find in Mozambique. He also set up the group's first clean energy unit in 2015, just a year into his tenure. Welcome, Claudio. It's good to have you with us today.
Thank you. Thank you very much.
Okay. So I'll start off with a general question. There's been a lot of talk over the past year about the pandemic accelerating the transition. What has your experience of that been as the chief executive at Eni? What do you think has changed, and how have you seen or experienced the pandemic accelerating the energy transition?
So clearly the pandemic accelerated the transition, but I think that this situation started sometime before we start our change in our company, and we start changing our company in 2014, 2015, because already in this period we felt that we were already in a transition. So the oil and gas very volatile, low prices, and the growing need to reduce our emissions. But the pandemic accelerate that is true, and I think that accelerated transition and create a feeling that we have a sense of urgency in terms of doing something to help ourselves, to help our people, and help the planet, the environment. That it's clear that the pandemic increased this sense of urgency in everybody. I think as a company, as a IOC, as an energy company, we have to play a very important role leading this transition, giving the example, and working together. Clearly, we cannot do that by ourselves, but we need to invest in the transition, in new kind of energy, in new kind of model, and that what we did in the last 7 years, changing drastically and trying to diversify our business, moving toward different kind of I think bio green activities, changing also our product, because our aim was clearly at first to impact and reduce our emission in the scope 1 and 2, but for us is important to have a strong impact on the scope 3. Scope 3 is 7, 10, 12 times more than scope 1. So we have to work on our product to decarbonize our product, selling a clean product, bio, green, blue, that can give the opportunity to our customers to reduce the CO2 impact. So our role is clearly crucial in that.
You were one of the first companies to come out with ambitious carbon cutting targets in the industry, but the rate of change, the rate of of the energy transition has accelerated. And are you concerned about Eni keeping up with that accelerating transition? I mean, what was ambitious maybe a year or two ago doesn't look so ambitious now. And do you have any plans to change your targets or to accelerate?
We honestly, we change our target every year. I think we improved our target every year, because we developed in the last 7 years different kind of technologies that allow us to improve the target, and technology R&D investment that we are in the range of 4.5 billion euro in the last 6 years and a half, and with a very short time to market. I mean that we had the technology, we implement the technology, for example, in the biorefineries. So we shut down to standard all refineries, and we developed 2 new biorefineries. Now we are producing more than 1 million ton with the target to reach 2 million ton per year. And we are the second larger producer in the world now. Neste is the first one. So that allow us to change and improve. So 2 years ago, we presented a very challenging target to reduce scope to have a carbon neutrality for upstream by 2030 and for the oil company by 2040, and reduce our cumulative emission by 80%. And now this year, in 2021, we presented in February a new strategy with clear target to reach to be carbon neutral by 2050, but with interim target. So we have target for 2025, 2030, 2040. That was quite important to give to our shareholders, stakeholders, the path, not just the final target, but how we reach in absolute term and also as intensity. So we said by 2030, for example, scope 1, 2, and 3, 25%, by 2040, 65%, and 100% of in absolute term by 2050. And we work out a plan approved by our board, very detailed. I mean, we put all our investment, all the cash flow with different kind of sensitivity, the EBIT, all the different costs, and also the cash neutrality of the different business to calculate also the shareholder returns based on the two different kind of business. So an upstream that became different, more gassy, and with clearly with a zero emission by 2030, and the new businesses that will grow and will justify themselves in terms of investment and pay the dividend. And that is very detailed. For that reason, now our ranking in the ESG ratings is very high, and that allow us to have the first sustainability linked bond. That is a 7-year maturity and 1 billion. That is the first sustainability linked bond for the industry, and was very successful. And that happened because of this, evolution of our business. It's true what you said. What we said 3 years ago is very old. Just 1 year ago is very old, because the technology helps you to improve on a daily basis. You must be very transparent and give all the results of your own work, and be very effective in the time to market and apply the technology, give the results. And that is a very good way, because you have, as a ESG investor, you can get access to good money to develop further your new businesses.
You've done a little bit of restructuring or reorganizing of your upstream portfolio recently. In May, you announced a memorandum of understanding with BP to combine some upstream portfolios in Angola. Are you considering further deals of this kind?
I think this, what we call business combination. The first one was in Norway, and with Vår Energy that we did with the fund, with the EcoTech. Now we are working with BP for Angola, and that is interesting because it allow us to, I think, decouple Eni corporation with this new entity that, first of all, can have can invest, have a debt. We work with the bank to understand which kind of debt can allow they can have to develop their own company without increasing the leverage of the Eni, and give Eni the flexibility and the ability to invest in the new businesses. That is the first one. We think so. Var was the first, Norway was the first one. Then we have Angola, and we are thinking also in other possible area where especially we are a lot of investments. So we want really to segregate this kind of investment in a single entity with some other company that have this kind of, they have the same kind of model in mind. And that is a way to reduce our leverage. And the same thing we are doing with Eni Gasoluce with the renewables is another business combination for a possible future list or sell or the minority portion to get, I can say, a double win. First of all, to reduce our investment, because this company, as a possible listed company or with a special partner, we have to decide. We are working on that. They have the possibility to invest. They have different kind of multiple. In our sector, we have 3-4 times our EBITDA. In this case, we can reach 7, 8, 10. So it can play the role and the growth in the renewables field in a different way with the right multiple. Then it can have a debt, and we can accelerate in this case the renewable and extract value from assets that are in Eni, but with a different kind of value. And I can say as a last point that is a really win point is we can sell, we can impact the scope 3, because we're going to sell green or bio product to our customers. And fortunately, we have about 10 million customers, 2024 more than 11 million, and we want to reach 15 million by 2030. So the possibility to reach with clean product our customer will impact positively our scope 3 reduction.
Okay, thanks. I'll hand over to Steve now, but just before I do, what other upstream assets or areas are you looking at to do this kind of combined, this combined company?
I can say the area, not exactly the assets. Discussion ongoing, but it's premature to talk directly. With BP, we found an agreement, so we can talk, but with the other company are still discussing.
Can I tag a question in quickly here related to this? You've been converting your refinery business to biorefineries, as you mentioned before. Could this be a candidate for a spin-off, the biorefinery business with customers along the lines of the renewable power idea?
I said something that a few months ago after the strategy, that could be a very good business. I mean, the biorefineries with the retail. So we put the bioproducts that is not just a biodiesel or biojet fuel, but we have green hydrogen or blue hydrogen, electricity. So all the retail stations that we are changing drastically with respect to the past, that could be a possibility. That is really premature, but is a possible interesting deal for the future.
You said that peak oil production will be 2025, after which it will plateau out, and then gas will play the lion's part in your upstream portfolio. But the debate around natural gas as a transition fuel is changing day by day, given concerns about methane and in the light of the recent IEA report too. How confident are you that natural gas will play the role you previously envisaged as a transition fuel? And how long do you expect oil to be part of your portfolio?
So I'm still convinced that gas is going to play a very strong role in the future, because we have to replace coal, first of all. We have to replace crude as well, oil. And then we need energy, and we need to really take along and help renewables and different kind of renewables to grow. Europe is quite steady, but in any case, is still consuming about 400 billion cubic meter per year of gas. So it's still a very, very important fuel. But you have to think that other region in the East and Far East is growing drastically because they have the issue of the target to reduce emissions, and coal is there. Also, if they are still using a lot of coal, but they need gas, and they are buying a lot of gas, and you can see the price, the price of gas in the last month, the last 4 or 5 months, increased drastically. And that's also because we don't have, in the last couple of years, we didn't have a lot of new development. So I think that gas will play, in any case, a strong role looking forward, and I'm still convinced about that.
But what are your investors telling you about your conventional business? Your investors, what are they telling you of your conventional business? Will you have to scale back investments in natural gas as well as oil, or not? Our upstream, unfortunately, is not something that we did yesterday, but in the last 10 years, we had a very focused exploration and a near field exploration, so very effective, with very good results, but with a very low break-even price. And most of our discoveries that we made in the last 6 years, talking about, we talked before Mozambique, but Zohr or Nuruz, or in Indonesia, Giant Creek, Merakes, all also in Libya and in Algeria, all gas discoveries. So that is a very interesting point for us, and discoveries made very close to the existing assets. For that reason, our time to market in the last 6-7 years has been one of the best in the industry, because we had this strategy from the upstream, from the exploration, and clearly our upstream is well balanced and is really helping a lot. The growth in the other different, in the diversification of the different sectors that we started in the last 7 years. Remember that we have so the cost to cover our investment. We cover our investment at about $37, $38 per barrel. So that is the break-even of the upstream. That is a very low break-even, and that allow us to have a cash neutrality that now is around 50. So upstream helped, this kind of upstream helped a lot our growth and our returns.
Thank you, Claudio. I'm afraid we're out of time, so that concludes our interview. A big thanks for joining us today at the Energy Transition event. We hope to see you again, hopefully in person next year. Thank you very much.
I hope so. Thank you.